Good afternoon, folks. This is Saturday, 1 p.m. New York time in January 13th, 2018. I did a couple tweets yesterday on the 12th of January, and this is the one I did for the cable, and asked what everyone would see in this image, and I did one for the euro as well. Okay, and I put a couple things in here to try to draw your attention to it, but I wanted to see what else everyone else would have from their independent perspective without me drawing any special attention to anything. And that's kind of like what I want to go over now. So I'm going to go over to Daily FX. All right, so we're looking at the cable British Pound USD. This is a weekly chart. And I want to, again, draw attention to the order block in here. Right in here is the order block. And we're going to change this to, we'll use this area here to be shaded in blue. So now I'm going to drop into an hourly chart. Okay, so we have our hourly chart, 60-minute time frame. And we can see how price dipped into that weekly order block. Okay, now it's not necessary that all of this area be concerned with. I'm just drawing a contrast to what other things I'm going to be highlighting on the chart. I want to delineate a specific range of date. Okay, I'm starting here. That's the beginning of January's trading. It's the beginning of the year. And I'm going to delineate another date reference point. And it's here. Okay, we don't see anything over here until there. There's our delineation in time. So we have a range in time. Now we're going to have a reference point in terms of price, or a range, if you will. Okay, and make this solid, and we'll thicken it up a little bit. Clone that, and then we're going to drop it right on the low here, just like that. Okay, so now we have a range. Okay, and I want you to think about this range just like I teach as it relates to the Asian range. Okay, what we're doing is we're actually bracketing and defining the initial week of the year and the first week of trading in January. Okay, so this is the ICT Power 3 applied to a monthly chart and weekly chart and a new year. So the importance is that we see how the market's going to seek liquidity, but we have to frame the market in such a way where we can anticipate specific levels or areas or liquidity pools to be rated or probed. So now we have buy side liquidity in the form of buy stops resting above these highs here. So with buy stops above this high here and sell stops resting below this low here, we have the same concept that's applied to a daily range in response to the accumulation, manipulation, and distribution cycle that I teach, or the ICT Power 3 concept. When we understand this and we look for elements of runs on liquidity, we know that resting below this old low is going to be sell stops, and we also know that the dollar index was bearish at the same time, and we know that in this shaded area here, there's a weekly bullish order block. So there's a reason to want to go below this low. It's directly linked to a weekly time frame that would be deemed bullish. And I want you to think about it in terms of how price, when it drops below this low here, I'm going to thicken it up a little bit. Okay, so we have our range. Price drops down below this initial week. Okay, so this is not some new weekly strategy. Okay, this is something I've taught before many times on YouTube. Now, I have taken the videos down, but there is an army of people that have downloaded everything I've ever produced, and they have a better catalog and organization than I do with my content. But this is simply something that I taught with higher time frame charts using a monthly bar and a weekly bar, and now we have a new year. So the same thing applies here, but I want you to think about how price seeks these liquidity reference points, or as I call them, liquidity pools. So price drops down here initially to get into the weekly order block and take out the sell stops below the market low and leaving this area of consolidation. Once the sell stops have been taken, what are they going to aim for? Well, if they go to the sell stops and they go down to a weekly bullish order block, they're going down there to do what? Accumulate. Okay, so they bought here, smart money did. They bought more. Now they're going to manipulate. So in other words, they're accumulating longs, and then they manipulate those individuals that are already long out of their positions by running the stops. Those sell stops have been taken for anyone that's already long. Their manipulation on price takes those long holders out by tripping their sell stops. Their sell stops become market orders to flood the market. There's buying liquidity counterparties right there. So smart money can buy more at a cheaper price than they did here and here. There isn't going to be a large degree of volume here because it's only going to be relative to the stops. So smart money sets the range by buying low, and then they wait. Well, they do it again here, but right below here, they just unseat, okay, or manipulate those individuals that are already long out. So they knock them off. They accumulate their position by buying their willing sale of their long positions based on their sell stop. So long holders have their sell stops hit, and the person or counterparties to those sell stops being taken are going to be smart money. They will buy their stops as it drops down here, and that's why we see this large degree of volatility on the upside, because they have entered long here. Where's a really logical area to get out? Well, you want to find someone that wants to be buying from you at a higher price. But see, that's the problem. We're trained in the books to buy low, sell high. So if we're trying to buy low and sell high, how can we find someone that wants to buy it from us when we bought it low? How can they want to buy it higher? You have to find liquidity pools in the form of buy stops. So when the price trades above this level here, when this occurs, right there, these buy stops become market orders to buy at the market. Exactly what the long holders want to have here. They want someone that's willing to buy at a higher price because now they want to take their profits. Not all of them, but the longs that they accumulate here, they're going to sell some portion of it to willing buyers at a higher price. And as price starts to expand higher, breakout artists, price chasers, they start buying it too. And that's when all of this range here, we're seeing liquidation of participants that bought down here, bought here, here, and here. So we're seeing a power 3. The opening price is the opening on this candle here, which is 134.99. And we see power 3 formation here where that small little portion of the range drops down below the opening price, creating the low of the month, the low of the week, and so far the low of the year. Now, I'm not stating this is going to be the low of the year or anything like that, but this is how we look for liquidity runs. If this is all we see in terms of a price move up to 137.40, is this not a significant enough of a range to be profitable for your study and a demo account? Obviously. Who wouldn't be who would be upset about that? But I want you to view how the monthly candle or monthly range, the way you interpret that is you want to use the first 5 days of trading. Now, they are not going to be always like we just had for January. If we look at a calendar, you can see that it starts on a Monday, and the 5 days of the first week of January happen to be Monday through Friday. It won't occur like that always. Sometimes the month's going to begin on a Wednesday or a Tuesday or something like that. You're going to use the first 5 trading days of every month, and you're going to define that like this. Okay, and what that's going to do is offer you the same concept that I taught you with the Asian range for Power 3 on a daily candle. You're doing that with a monthly. Okay, so once we have these ideas applied to our chart, we can clearly see what the algorithm is going to be reaching for, why it should be reaching for it, and it provides a great deal of context and detail, and dare I say it, X-ray view of what price should do in the future from a logical standpoint and from an order flow standpoint. It's not guessing. We know what it should be doing and why it should be doing what it's doing. This is the element behind the cable chart that I wanted to see if you guys would see. And now you know. So let's go over and take a look at the euro dollar now. Okay, so we're looking at the euro dollar. This is a weekly chart. And again, we'll be using the order block on a weekly basis here. All right, so now we can drop down into our 1 hour chart. Okay, so we're going to do the same thing we just did with the cable. We're going to mark off the beginning of the year. We're going to get our first week of trading delineated. This is going to act as our initial range. And we'll add in, I'm just going to use horizontal lines now and just cut to the chase. Right here for our high and our low. Right there. Okay, so we have our initial low and high, first week of trading for January and for the first of the year. And we can apply these ideas with the weekly range approach or idea using Power 3. Okay, so what we're looking for again is elements of accumulation, manipulation, and distribution. We know that this area down here in the shaded blue area is not a demand zone, it's a ICT bullish order block. So we know what's residing down there, but we have an initial range. We know what's resting above the high, it's buy stops, and what's resting below the lows, it's sell stops. So what we're looking for is, we have a study on the higher time frame looking for a bias, if you will. Obviously, we know dollar index was bearish, bullish on foreign currency. We can really be bullish when we get down to the weekly order block. You can see the reactions here. They dipped into it, dipped into it, dipped into it, almost got to it again, but ultimately took off on the heels of ECB. All fine and great, wonderful. But I want you to take a look at the elements that are seen here, because you can see all of the things that I teach with the Asian range being applied to the Power 3 on a monthly chart. Again, the opening on the month is on this candle here. Comes in at 119.99, basically 120, big figure. And we have the consolidation, and if we're bullish, we're going to be looking for what? Evidence is that they're buying. So they bought here, rallied up. They bought here, rallied up. They bought more in here. Price dips down into the weekly order block. They accumulate more. But more specifically, they take out these lows. Okay, the lows have been taken out. They reach down to an area of long-term bullishness with a weekly bullish order block, and we can see them working that level. Look at the reaction up to this range. This is the same type of thing you would expect to see with the Asian range on a daily chart, or a daily range rather. Price drops back down. And for anyone that has my old tutorials where I teach the London open setup, where this would be the Asian range, and price drops down, gives a Judas swing, an optimal trade entry, failure swing, and then the daily range runs up. All we're looking at here is the same thing applied to it on a monthly perspective. We have the monthly first 5 trading days of the month, bracket those out, define your range, have a bias, bullish or bearish, and then use the same concepts that are otherwise taught in the intraday models, and you'll see that we're using not a, again, new, weekly, or refinement of my ICT concepts. It's always just this. It's what I've already shared, but you can't put lipstick on this and call it something else, folks. It's something I've taught years ago. People have it in their video library, and they know it when they see it. So this is the approach to using Power 3 with a higher time frame perspective, and it delivers just as much precision that you would expect as my examples have shown on an intraday capacity. In terms of market symmetry, we can see the range that we do, like with the Asian range. We do 1 standard deviation down, boom, hits it as it overlaps and converges with the weekly order block that would be deemed bullish, and 1 standard deviation on the upside. We can see that the market has thus far, with no problem whatsoever, gone 1 standard deviation on the upside, and we'll see if there's any more continuation next week as we go into new trading. So I wanted to share this with you, give you one more examples of how we can use not just intraday stuff, but using the same elements of time and price that I teach, and using the ICT Power 3 concept, applying it to a monthly perspective and a weekly perspective. We can see that same thing happening here. Let's take these off. Okay, so we have the Monday's range in here, right here, Monday's range. And if we apply that same theory, not on the monthly perspective, but on a weekly basis, okay, we have Monday's range here. Okay, so here's Monday's trading, and below that we get the run on Tuesday, taking the liquidity out below that low at a weekly bullish order block, as one would expect. And then we're going to take this range here and we're going to duplicate that. Okay, and again, this is not something new. No one can take credit for this stuff. This is stuff that I taught for free on YouTube. Okay, and you can start doing your standard deviations, and you'll see where price will want to reach for. So we're looking at 122.30. What is that? Let's put a horizontal line on there. So 122.38.7. Okay. Now remember, I had shared a chart last week with an objective of 122.32. And should we hit that level, I've already put it out there, so it's not like I can say, well, you know, I thought it was going to go here and look like I did in hindsight. It's been out there for several days. So should we see 122.32 traded to, now 122.38.7, if that's traded to, you know why? Because this is the mechanics behind it. The algorithm is seeking these areas of liquidity. But specifically the 122.32 level, should we hit that level, I will then outline how I knew that was likely to hit. Not guaranteeing it, but that's what I'm looking for. So between 122.30 to 122.40 in that area, I think it's a reasonable upside objective for next week initially. Should we see continuation and erosion on the dollar index, then obviously that's going to compound and see larger upside objectives for Eurodollar and cable, and lower objectives on the dollar index. So hopefully you found this video insightful. Until I talk to you next time, I wish you good luck and good trading.